Welcome to my YouTube channel Indian Bull vs Bear. This video is part of the series The Final Missing Piece. In this, I'll share my analysis of historical trends of hotels and restaurant sector. Before moving on, please read the entire disclaimer carefully. The hotel and restaurant sector in the Indian share market consists of companies engaged in hospitality services like hotels, resorts, lodges, restaurants, and bars. The growth drivers of the sector includes tourism boom, increase in disposable income, corporate and MIC tourism, and online food delivery. Government supports this sector with initiatives like Dekho Apna Desh, visa liberalization, and infrastructure development which promote tourism. The challenges that the sector is facing includes seasonal demand, high operational costs, competition from online rentals like Airbnb and Oyo, inflation and supply chain issues, and regulatory hurdles. So now in order to identify trends in this sector, I'll present two graphs. These are the end results of my analysis of the share price movement of last 10 years of top 10 companies of this sector. The top 10 companies of this sector comprises of 2 large cap, 4 mid cap and 4 small cap companies. The first graph will show the yearly returns, whereas the second will show the monthly returns. So let's start with the first graph. So this is the yearly returns graph. The green bar over here or the red bar, they shows the yearly returns. So the green bar shows the positive returns in that year, and the red bar shows the negative returns. This orange line down here is it shows the cumulative returns in percentage. The green bars, the green line here, it shows the number of months with positive returns, whereas these red bars, these shows the number of months with negative returns. So let's start with 2015. 2015 was a decent year for the sector. This sector gave returns of 13.70% in that year, with 6 positive and 6 negative returns. So basically, 6 months gave positive returns in 2015 and 6 months gave negative returns. 2016 was a bad year for the sector, and this sector gave negative returns of minus 7.32%. And again, 6 months gave positive returns, whereas 6 months gave negative returns in 2016 as well. 2017 turned out to be a very good year for this sector, and the sector gave returns of 56.10% in 2017, in which 8 months gave positive returns, whereas only 4 months gave negative returns. 2018 was, I would say, below average year for this sector, and the sector managed to give barely positive returns of 5.37%, uh, in which 7 months it gave negative returns, whereas 5 months gave positive returns. 2019 and 2020 proved to be bad years for this sector. In 2019, the sector gave negative returns of minus 4.22%, with 9 months gave negative returns and only 3 months gave positive returns. 2020 was even worse, but understandably so because of the COVID restrictions and lockdown. So in 2020, this sector gave negative returns of minus 16.19%, with 7 months gave negative returns and 5 months gave positive returns. The situation improved dramatically in 2021, and the sector gave positive returns of 30.45%, with 6 positive and 6 negative months. In 2022, the situation improves further, and the sector gave positive returns of 54.83%, with 8 positive months and only 4 negative months. In 2023, the situation improved even further, and the sector managed to give returns of 55.92%, with 10 months in that year gave positive returns, whereas 2 months gave negative returns. 2024 too was a very good year for this sector, with the yearly returns of 45.59%. 7 months gave positive returns, whereas 5 months gave negative returns. Now, if you see last 4 years, 2021, 22, 23, and 24, last 4 years were very good years for this entire sector. The cumulative returns, if we see the cumulative returns, if you follow this orange line, the cumulative returns of last 10 years is 538%, which means more than 6x in last 10 years. Now let's see the takeaways from this graph. So the first takeaway is that the cumulative return is 538%, which is more than 6x in last 10 years. The CAGR is 20.36%, so a solid CAGR I would say. Negative net negative yearly returns. So these are three. Now this is not good. So in last 10 years, 3 years are net negative. So not the best I would say. We have seen majority of the sectors who have performed better in terms of net negative yearly returns. Best year 2017 was the best year for this sector with more than 56% yearly returns. And the worst year is of course 2020, the COVID year, the lockdown and all those things. And the sector managed to give negative returns, that too of minus 16.19%. And the positive to negative year ratio is 2.33 is to 1. So that means for every one negative year, the sector has given historically in last 10 years 2.33 positive years. Let's move on to the next graph, which is the monthly returns graph. So here is the graph, and these bars over here, the green bar shows the mean monthly change, the positive returns, and these red bars shows the average negative returns. So in this graph, I have taken the average of last 10 years returns across every month. The green lines shows the number of years with positive returns, and these red lines shows the number of years with negative returns. So let's start with January. So on an average, January has given returns of 4.42% in last 10 years, with 6 years giving negative returns and 4 years giving positive returns. February seems to be the worst month for this sector with an average return of negative 1.58% over last 10 years, with 6 years negative returns and 4 years positive returns. Now March, although it's showing negative 0.26% as an average return, we have to take into account the March 2020 crash. So considering that, I would say minus 0.26 still not that bad of the returns. April seems to be the best month for this sector with average returns of 5.4%, with 8 years giving positive returns in this month and only 2 years the sector gave negative returns in the month of April. May, average year with average month with 1.01% average returns, with 7 negative and 3 positive years. June, a bit better with 2.05% returns, 6 positive and 4 negative years. July, definitely better than June with average returns of 2.22%. And in last 10 years, 7 times the sector gave positive returns in July and only 3 times it gave negative returns. Now, August is completely opposite. August has a returns of very poor returns, I would say, of 0.06%, almost negligible returns in last 10 years in the month of August, with 7 years negative and only 3 years gave positive returns in this month. September, 2.72%, so a good month for this sector, 5 positive and 5 negative. October, 1.95%, so a decent month with 7 times positive and 3 times negative returns. November, 2.32% returns over last 10 years with 7 positive and 3 negative. And lastly, December with a very good 2.85% average returns in last 10 years with 5 positive and 5 negative. So let's see the takeaways. First, the cheaper months, clearly February and March. Costlier months, January with 4.42% returns, and of course April with 5.4%. The best month by far for this sector is April. And the positive to negative month ratio is 1.14 is to 1. Now this ratio is not very good. So what does this ratio shows? It shows that there were in last 10 years, that is in last 120 months, there were 1.14 positive months as against every one negative month. Now this ratio should be higher, and we have seen in other sectors as well that this ratio is generally uh, quite high than this. So that is all from my side in this video. Thanks for watching. Like this video, subscribe to the channel, share it with family and friends, and let me know your feedback. Thanks again. I'll be back soon with another video. Goodbye for now.